Hi everybody, this is Jeff from simpleforexsystem.net, and I'm here today with a video of something I haven't really done in a while, which is a review of somebody else's Forex trading product. It used to be when I got started in this gig back in, whatever it was, 2006, I guess it was. There was just a constant barrage of new products that were always coming out, and people were constantly asking for reviews, sending review copies, that sort of thing. That really just doesn't happen anymore. There just aren't a lot of new products out, and not very many people putting the time in to, doing the investigation, and the testing, and everything else that's required in order to bring a product to market that's worth having. I think there's probably still a few crap products being introduced by crap traders, but today is a nice change of pace. This is the the Forex Pip Maker. It's put out by a group called Forex Comrades, Cedric and the guys over there, who I have known for several years and have always thought these guys, they put out a decent product. And it's and this one is going to be no different. It is designed to work on some of the longer time frame charts. So if you're a 1 hour trader or a 4 hour trader, or even a daily trader for that matter, this is this is kind of the um, method, the tools, I guess you could say, that you really want to be using for that kind of trading. And the reason is very simply, it gets you in early on pretty much all of the moves. Now, Forex trading is Forex trading. Not every move is created equal. You can get in early and, find out you're, buying at the top, or you're selling at the bottom. That's just, sometimes that happens with Forex. So, not everyone is going to be a winner. Not every trade is going to, net hundreds or thousands of pips. But most of the trades that I've seen so far have worked out very well. It's really a matter of just, in most cases, having patience. I mean, what you're looking at right now, for instance, this is the US 30 chart. This is a 4 hour chart, and you can see where the candle, and this is what yesterday to today. This is right now. The market's open. Market's going to be open for another 3 hours and change. Okay, but you can see yesterday, yeah, would have been, I'm sorry, not even yesterday, last week. Again, this is the 4 hour chart, so it gets a little confusing for me sometimes because I'm really a Renko guy. But this goes back to near the end of the day on the 20th of September, and today's the 27th. So, a week ago, Wednesday, near the end of the day, you had a nice close down. And you can just, look, nice entry. Nice catch. It was at around 425 or thereabouts, and 34 425, and current price is 33 403. So 1,000 points in a week, not bad, not bad if you can get it. And I'm not trying to cherry pick trades or anything here. This is just the one that's sitting up here. This is showing you where current trading is. Let me see if I can scroll back here a little bit and give you some more examples. Here was one where, again, sort of the end of the week, and you would certainly be forgiven for not wanting to take this, late on a Friday. And you can see that, price was, it jiggled around a little bit, but ultimately took off and got down. You were somewhere around, 34 670, and price got down to, all the way down to 34 301. So, 300 or so. And of course, if you had gotten out on the 4 hour candle that closed across the line, which, I don't know about you, this is the prior to the London Open, it's 9 o'clock on the charts. It's actually 2 o'clock in the morning for those of us on the East Coast. So, you could have gotten taken out with a small loss, or you might have hung in there and gotten, a nice win. What I have found, there's a lot of arrows on this chart that essentially can be used as signals. And in going through this and working with it, what I found was that if you just kind of ignore the arrows, and what you're looking for is the first candle that closes on the other side of the line. Okay, you see the gold line which intersects through here. This, you can see the different colors. You get a blue color for the upward move. You get a purple color for the downward moves. If you can get into the first trade when the first candle closes in the new color, and then just hang on until you see the color reverse. Or if in case like in this case you had like a 300-point move, you probably want to move the stop loss to lock in 100 or 200 of those points. I would never sit there. I would not want to sit there and watch a 300-point gain come back and take me out at break even. I think I'd lose my mind in that case. But you're going to want to lock in some profits as you go. But if you just stick with that, here again we're just going back to the 20th of September, right before the really good trade. You had a candle that closed across the line. You're in the blue. You can see that first candle went from around 650 and went all the way up almost to 800. So it was like a 150-point move in just 4 hours before it reversed. Then turned around, came back shooting down into below the line, and now triggering another sell trade. This is really very effective. You just have to have the patience to wait for the first candle to close on the other side of the line. So I think if you are into longer term trading, this would probably end up being a pretty good tool to have in the toolbox. You might actually prefer that over some of the other methods that are out there. This may work better than the method you're currently using. But if you're a long-term trader, strongly urge you to at least check it out. Okay. Now, those of you who know me know I'm a Renko trader. I use Renko boxes. I don't trade the time-based charts. So I wanted to put this up on Renko because the thing about trading Renko is that you get rid of see all these basically go nowhere candles that cause a nice big almost like a bell curve reaction to the line involved here on the indicator, but price really didn't go anywhere. A little higher, a little lower, a little higher, a little lower, but not much is going on. And that's these are 4-hour candles, so every 6 candles is a 24-hour gap of time. So it's like 36, maybe 40 hours before something finally really happened and price took off. But each time a candle opens and closes, it forces the indicator to make some adjustments, even though really price hasn't gone anywhere. Okay, well, I prefer Renko charts, and let's take a look at that. Here's a Renko chart from today. Look at that. Clean that back out a little bit. Again, the idea is you want to wait until the candle closes on the other side of the line. Now look what happens when these are 500 pip boxes, Renko boxes. So essentially a $5 move. So every time one of these boxes closes, either moving up $5 or it's moving down $5 from the bottom of the previous up boxes. So in fact, when you see like red, green, red, that's a $10 price range right there. Okay, and then when it breaks out, it's another $5, another $5, another $5. You can set these to whatever you want. In fact, if you set it to 10, 1,000 pip settings, so you get basically $10 boxes. These things, it actually works even a little bit better, but you get only a handful of trades a day, and you may not see any while you're here. So the 5, which also works very well, all you're doing is you're waiting to just jump in when the first box closes on the other side of the line. So here, well, let's look at this is current price. Okay, just so you know, it's 1:23 in the afternoon. So this would have been about 111, 112. You got your first. See if I can get this. Nope, it'd been 105. So that would have been 18 minutes ago. You got a sell signal. little bit of back and forth here, but then finally it took off, and this is about an 80-point move. Not bad, not too shabby. But here you go. As soon as it closes across the line, you're going buy. As soon as it closes back across the line going the other way, you've got a sell. So you've got a nice sell that's 30, 35 points. A buy that goes about 20 before reversing. Now these smaller trades, when they reverse, basically the reversal eats up almost all of the profits you would have had on the trade. So I always considered these smaller moves to be pretty close to being break even. But as long as you're staying, when you get into a trade, as long as price stays in the same color zone, this is still, basically the sell color for the zone that you're in for the sell trade. You just hang in there and wait for the, kind of the back and forth nonsense to work itself out, and for the sellers to finally start dominating, which of course they did here to the tune of about 80 points. But you can see there are just so many of these trades. Now here's one that really didn't go very far, and ultimately it was just a loss. No big deal. You're looking at maybe 15-point loss. Butted up against a series of 30, 35-point wins, and then of course the 80-point wins. So, small losses, big wins. That's what you're looking for. Now, one last thing I want to show you, because I know for a lot of you that are going to be watching this, a lot of you already have the PV2 setup I have. Just for fun, I went ahead and I put the where is it? Where it is? There it is, Renko Mac Dots. I put the Renko Mac Dots on here, and the reason I did that is, one of the drawbacks to the Mac Dots is that, you tend to get some smaller. They're tradable moves, but basically they're moves to nowhere, and there are times during the day you can get a bunch of those. And what I found was, if I ran this along with the Forex Pip Maker, so I've got the Mac Dots at the bottom, I got Forex Pip Maker at the top. What I found is that when you're in a situation where you're getting divergence trading signals, the cross above the dotted line indicates you should be buying right in here, but you can see prices really moving down. The whole thing is wait. You finally got everything to cross above, but now what you're doing is you're waiting for that first legitimate sell signal. Arguably, it's right here, because you did in fact get the dot to close below the line. So, okay, it went the wrong way on you. You lost, 15 or 20. But now here's your next trade. Now, one thing to look at, you want to hang in if you can, can ignore some of these, retraces that really make you kind of grind your teeth. If you wait until price gets all the way below the bottom of the other 8 line, in this case the negative 0.8 line, that until you get there and then start to move back up again, you're still in a sell signal. So you get the sell signal here, and once you're in it, you can pretty safely ignore most of what's going on up in the with the other indicators. But this one just sold and sold and sold, and look, you're still in the sell trade. Okay, and this has happened like 2 or 3 times today. In fact, we come back over. Well, this is where you had the problem with sort of divergence. Indicators moving up, but the price is actually moving down. But if you get past that, you can see that over here you were given basically a sell signal. It did move back and forth, and you got up into the blues, and that's usually kind of dangerous. But when that happened, you're moving down, and you're still moving down. You're waiting to cross below the 08 line, minus 08 line again, before you take exit and start looking for buy trades. And I'm doing that again. What happened? Another like 60-point move. I told you this happened several times today. Today was actually a good day for this. Here we have kind of a nice situation. You're waiting for that, that buy signal off of the pip maker. You're still below the line here. You're slightly above the line, so you should be looking for a buy trade, but you're obviously still in a sell situation here. It finally reverses and gives you a buy. You're above the line. You finally moved above the negative 0.8 line, so you get another buy here. It comes down a little bit. Dot didn't break below there, below the 8.8 line. So you're still in business. You're up here. You're up here. Up here. And now when you're finally up in this area is when you're finally getting, an exit, which ends up being about, I know 40, 45 point trade by just hanging in and just waiting to get sort of like confirmation off of the pit maker before you jump in. A lot of these trades that have been kind of going the wrong way or barely getting going and then reversing, which has been a real problem, especially the last few days, it more or less eliminates that. So if you're trading the PV2 method and you've got the MAC dots on your chart, seriously, seriously, seriously think about picking this up and using this as sort of a filter slash confirmation for the trade signals that you're getting off the MAC dots. It will help eliminate some of the lesser trades that without the pit maker on there, otherwise met the requirements that we've set up for using PV2 and using the MAC dots. So anyway, there is a if you're found this video because I sent you an email, check the email for a link to the page, either a page I built to put the video on that will have a link to PitMaker, or I'll just have a link to PitMaker. Maybe it's in the email, and it will definitely be on the page as well. If you're watching this on YouTube, check the comment section, not the comment section, I'm sorry, check the description section. Just below the video, we'll have a link both to the pit maker, and also put a link in where you can check out PV2 and the MAC dots indicator as well. So anyway, that's it, guys. This is I'm actually kind of a little bit excited about this. There's actually a really good product out on the market finally for Forex, and it's been a while since we saw one of those. So anyway, give it some thought, check it out. I think you're going to be happy you did. Anyway, thanks for tuning in, and I'll see you in the next video. Bye for now.